Thank you for watching People's Daily Online. Alibaba, the giant Chinese e-commerce portal that have billions of users, is going to go IPO in the United States this coming Friday, and is expected to be the biggest IPO ever in the country. Today, we have invited Tim Speiss, personal wealth advisor from EisnerAmper in New York, to talk about this IPO that the whole world is anticipating. Thank you so much for being here with us, Tim.
Thank you. Good to be here.
Okay. So the founder of Alibaba, Jack Ma, he's become the latest richest man in China. But unlike the previous tycoons in China, Jack Ma is not from the real estate industry.
Right.
Yeah, so it kind of signifies the shift in terms of the China's economy. What do you see the shifting in this China's traditional economy to the internet economy?
Well, the internet economy for the past 5 years has been very prominent in mature countries. As a matter of fact, it drives almost 21% of gross domestic product for mature countries, such as China. For the emerging countries, though, the smaller ones, it's really not has not been as prevalent. I think the next step is to try to get internet technology and more technology generally into the emerging markets and those populations, because then we would have greater global growth. But right now, it's really contributed a lot to the more mature markets, that is the internet and related technology.
How about the Americans? What do the Americans feel on this Alibaba's IPO?
Well, most of our relationships and clients have expressed excitement, and I would think there'll be a lot of demand from what we're being told. Certain of our clients or just investors generally probably need to exercise a little bit of caution. They don't want to, if they're going to participate, they shouldn't over-purchase beyond what a risk tolerance might be in diversification perspective. But again, I think it's been very exciting.
Hong Kong was originally Alibaba's IPO's first choice, but for some regulations issues, the company finally decided to go for the United States instead. Could you let us know what are the differences in terms of these IPO regulations between Hong Kong, the mainland, and the United States?
Well, between Hong Kong itself, if we start there, they did not like the shareholder controlling interest not being part of the IPO. Here in the United States, that was not an issue. And that's really why Alibaba made the decision, because they were retaining a controlling interest. They were also using a Cayman entity, a partnership that holds the shares, which Hong Kong did not approve. That was not an issue on the U.S. exchange, so that's why that happened. I'm aware, though, that now the Hong Kong exchange is asking for public commentary to see if they should relax these rules so that perhaps this doesn't happen in the future.
In what aspects can the current Chinese capital market ruling system learn from the U.S. regulations?
I think both China and Hong Kong are very sophisticated. They have sophisticated markets. They have sophisticated investors. I don't have any advice per se. The U.S. market is interesting because a lot of the largest, certainly U.S. companies, you look at Facebook, Google, Intel, LinkedIn, they all went public in the United States. There's also Chinese companies, as you know, have also gone public in the United States. So I think there's both the perception and then the rules, the regulations that might make it and have made it more appealing for these types of technology companies to go public in the United States. That's not to say that going public in Hong Kong or China is not effective. It is, but it just seems that the U.S. markets have been more appealing.
Ever since 2009, there are a total of 9 out of 10 largest IPO from Chinese internet companies decided to go listed in the United States. Why the U.S., and what attractions can this country offer to these Chinese companies?
I think it might be the perception that there's more global investors with access to the markets. Beyond that, it's probably all going to be facts and circumstances. I would also say that there could be the perception that the regulations in the United States are so, let's say, stricter, that might cause more security, say, investors to feel more secure because of the filing process.
Do you foresee that there will be more Chinese e-commerce companies wanting to be listed in the U.S.?
That I can't say. I mean, what I can tell you is that China's technology investments, R&D specifically, has increased almost $400 billion in the past 15 years. And certainly China is developing a lot of innovative and technology products. They're now probably upwards around 21% share of global R&D, right behind the United States. And China is doing very well. But as far as where the next company out of China or Asia even might decide to go public is really anyone's guess.
Right. In the recent 2014 Summer Davos, Chinese Premier Li Keqiang said China wants to use innovation to create an upgraded version of Chinese economy. And of course, Alibaba has been seen as the representative in this area. And we are not merely talking about the company's technology, and because the company's partnership system is also seen as an innovation. So, what is your opinion on the current Chinese development in innovation, and how big does China have in terms of its capability for the future developments?
Well, as I mentioned earlier, the National Science Board has ranked China at over 21% of global R&D production presently, and forecasted China to be number one in the world. I don't know exactly how soon that will come, but certainly R&D and technology is becoming a much larger part not only of the Chinese economy. They've established themselves as a very credible innovator in that regard, but also on a global scale, really leading the world, close to leading the world around innovation along with the United States.
Okay, it is a pleasure to have you here.
Thank you.
Thank you.